Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market stabilized this last week after 4 weeks of pretty good selling. The market had dropped about 6% off the S&P 500 and 7.5% off the NASDAQ in just that short period of time. Investors sold hard to start the week as Asia fell on more Evergrande worries, and interest rates jumped as oil surged near $80, sending the NASDAQ down hard on Monday. But recovery in stocks came as short-term oversold condition brought buyers back. And President Biden said that he was confident in Powell, and that's despite the pressure that's coming from the hard left. Then focus came back to the debt ceiling, and Yellen repeated the word catastrophic as she talked about the U.S. not raising its debt ceiling, and then that bringing a potential large recession in the markets, in the economy. And when you hear her say that, you realize she's completely oblivious to the fact that the catastrophic aspect of all of this is the massive spending and massive debt. That is what is catastrophic, but you can't get her to say that. Leaks came on a pending deal on the debt ceiling, and that sent the stock market up Wednesday. And on Thursday, we got a confirmation. So big up days there for the stock market as some relief did hit. They did come up with a deal that they plan to kick the can down the road. They only raised it $480 billion. That's the debt ceiling going up into the beginning of December, and then December 15th is now that new drop dead date for them to go through all of this again. Of course, the Republicans want to keep the Democrats at bay, not being able to pass their big programs that are coming up. We don't know if it's $3.5 trillion or $5.5 trillion, and of course arguing about that. So the Republicans still trying to stand in the way of that, and that's why the very limited increase in the debt ceiling. Then news of smaller than expected new claims and unemployment. That news and the unemployment news sent interest rates up, and all week long we did see that. And there was some attempts from the bond market for some little upticks, but you couldn't really see that as interest rate pressure has been on the upside all week long. The energy market has been super strong on shortages in the Eurozone and Russia and Brazil and other areas that it's starting to contaminate. Natural gas was exploding on Wednesday as there were prices that were talked about in the cash market that were up as much as 40%. And then that all changed before the U.S. market could open as Putin came out and he killed the rally. He said that they would increase some supplies. It was pretty vague, and they said that they have already fulfilled their contract obligations. So that saw the natural gas market fall extremely quickly. Nat gas fell to about $5.35 at the low, and I'm telling you, it moved down to a good spot. I think for traders that are interested in the long side of natural gas, you got to look at the support that is right around that. Now, it's bounced a little bit off that right now, but the natural gas market, all of a sudden, the pressure is for the upside is not going to come off of it. So there may be some opportunities there for you to look at. But only slightly helping stocks is the surge in energy because the energy weighting in the S&P 500 has slipped now below 3%. it used to mean a lot more for the stock market than it does now, as it was up around 6% some years ago. So energy market's not helping the stock market overall. Thursday, we saw some changes in the Chinese stocks. China was on vacation, and so they weren't trading until Friday, but Thursday we saw the US ADRs moving up sharply. Now, these stocks have gotten hammered. I mean, basically they've been cut in half. And even though they have some big up moves, you could still see them potentially testing the lows, and all of the problems with Evergrande and now some other real estate companies in China that are in default or will be in default. All of those things could be raising their heads again. But when you look at these Chinese stocks, take a look at Alibaba and NIO and Baidu. Those stocks have got either breakaway gaps or they have island reversals. Those are the kind of stocks that I think have some opportunities here versus the U.S. market, which we think has problems. So when you look at the amount of declines in the Chinese stocks, I think you're going to say, boy, that looks interesting. So, like I say in the beginning of the show, we hope we bring you ideas and opportunities. Well, there's one for you. Friday's unemployment report showed a big miss in payrolls, 194,000 uptick in payrolls, and that's versus an expectation of over 500,000. But the U3 fell to 4.8% as the participation rate fell sharply. With labor tight and wage growth moving up quickly. Now, the wage growth numbers were up 0.6% for the month. That's 4.6% year over year. Do you hear that, Powell? The Fed is not likely to pull back on their plans to start tapering just because those payroll numbers missed for 1 month. Don't expect that to change at all. And that is likely to come in the next meeting, where they're going to give a very good sense of when the taper is going to start and what the rate of the taper is going to be. Of course, interest rates may not be ticking up that quickly, but the bond market wants to push the Fed's hand. If you look at the big move, I'll speak about that again in a moment. The stock market for 3 out of the last 6 days had sharp advances. Traders and investors still think we're in the same mode of the past 18 months coming off that pandemic, but the technical indicators are giving warnings. And like we saw on Thursday, late selling did come in. The S&P 500 had been up like 65 points or more, and all of a sudden it fell to only up about 35. So sellers are here in the market. Here on Friday, the market is not doing very much. It's just kind of sloshing around right now. And I continue to expect wide chop in the market here and a downward bias and a bull market peak. For the week, the S&P 500 manages a gain right around 1%, though the NASDAQ, the Dow, the Russell, they're only slightly fractionally higher, and that's at midday here on Friday. Bond market, that was hit hard as rates moved up sharply. I mean really sharply. 30 years down about 2 3/4 points on the week, and the 10-year yields jump 15 basis points. I mean, this is some really big moves, and the market is really getting ahead of the Fed. They didn't care today at all about what they saw out of these unemployment numbers here on Friday as the bond market, well, it waffled around a little bit when those numbers came out. It tried to tick up, but then fell hard again, down nearly a point here right now, as interest rates in the 10 years tick up to 1.61%. Remember, our target up here is to get over that 1.73% and maybe up to 1.8% or higher, and then up to 2.2% into early part of next year. So you'd have to follow our big picture analysis and be a future speak viewer, which you can watch, of course, if you take our PSP, our Popular Services Preview, and you'll be able to watch that show. So that bond market really showing a ton of weakness at a time when we really expected it. Gold market about unchanged on the week. Friday, they tried to get a big rally on this news on the employment numbers, and then the sellers came in very quickly. I mean, we saw gold flying on the upside, 20 or something more dollars, and then all of a sudden down on the day. Silver was up 55, 60 cents very quickly, and now has given that all up, most of it up about 12 cents on the day. But silver gains about 20 cents on the week, and those Friday failures come as they both moved up into important resistance areas. And there's a lot of resistance overhead, and we have shown that we're not really thrilled about these precious metal prices, though there's a little room for uptick. I don't think that they're going anywhere. The dollar about unchanged on the week, and oil market 8th straight week exploding to the upside here right now, up well over $4 on the week, and trading right now for light crude futures just under the $80 level. Our target was right around this area, and potentially over the next few weeks getting up to 81.50. And if you, of course, want to see that information, you can watch the Future Speak show. So that intermediate term target, we're going to hold on to it right now at about 81.50 on the light crude market. Coming up in this show, Arvi's going to do a preview on stock sectors, and he did an amazing video. It's a video looking at some of the 16 highest cap stocks. And we're going to give you a preview of a couple of those stocks coming up. And of course, you have to be a level 2, 3, or 4 member to watch that video. And I'm going to give you a little cycle analysis lesson. We're going to look at correlations, cycle analysis and correlations, looking at the Canadian dollar and its relationship to oil. So it's US dollar Canadian on the cash market and its relationship to oil. Even if you have no interest in these cash forex markets, you're going to have interest in what you learn by watching this little brief clip that I'm going to give you just in a couple of minutes. And then at the end of the show, I'm going to do a short-term view on SPY on the spiders. So we have just an amazing show coming up here, and of course it's already been amazing, right? All right, so I want to remind you to go to askSlim.com if you're new and you've never been there. Please become a free member. If you look a little bit down into the middle of the front page, you'll see a opportunity to click there and become what we call a PSP member. That's Popular Services Preview, and you'll be able to get 7 days free of our a really higher level content. You'll love that. If you're watching this on YouTube, please do subscribe to the channel. Click that notification bell. That really helps us when you give us a thumbs up. So make sure that you like this video. And if you're on Twitter, follow us at askSlim for questions on membership, our huge offerings of education and analysis, and tons more that we're going to show you here. Write to Matt at askSlim.com. He'll be able to really help you out so you understand what kind of a great site we have and an amazing team that works with us. All right, so I want to give you a quick reminder coming up this week. I'm going to be speaking on October 10th. This is at the Wealth365 Summit, Greater Success for Day Traders, using multiple time frame analysis. I'm going to show you how to use a couple of different time frames and some indicators in order to raise your probability of success. It's about getting to where you don't have the bigger losers than winners, and getting to where you don't have more losers than winners. That's really the malaise that a lot of short-term traders get stuck in, and I'm going to help you fix that. So please do join me at that summit. The Wealth365 Summit will have over 50 speakers in 6 days. It's amazing, all of the great people that you love to hear. It'll start Monday on 10/11. Write team at askSlim.com and ask for the free link for the Wealth365 event, and Brian will send that over to you. And you'll be able to sign up for that. Also, on some of our posts, we put that up, also that link. So a few ways that you could sign up, and please do make sure that you join me there. All right, we're going to give you a little preview here of Arvi's just amazing work, stock sectors. There are 16 sets of analysis in here where he looks at 32 charts. 16 weekly, 16 daily on great important symbols. Here's a little taste of that, where you're going to see the preview on these high cap stocks, UNH and AMZ, Amazon. And you're going to get a sense for what is kind of a mixed situation.
So this is UNH. This is a name that we follow very closely and do trade quite regularly here as well. We are really due to form a bottom here in UNH. The low was due 8.9 to 10.4. You can see we had that really decent sell-off right here and are turning right back up here on the upside this week. In UNH, looking for that bottom to have formed and for this to turn back up. Now, if we go ahead and use the fib tool once more, just want to show you the levels on the upside here. We have an intermediate term 50 at 407, a 61.8 at 413, and a 78.6 at 421. If we were to get through the intermediate 78.6 at 421, that would be a very positive situation. Then we would be looking for a move through the prior high at 431. If that were to happen, then we would be looking at an intermediate 61.8 at around 452 or so. So a overall positive pattern in UNH with a series of higher cycle highs and higher cycle lows throughout this whole time period. So this is just forming a pretty nice uptrending channel right here. And you can see we are just basically tracing out that this channel really quite nicely. So a positive pattern in UNH and our overall bias here would be positive once we see this weekly momentum curl back up to the upside. So this is Amazon, and this is an interesting pattern here in Amazon. You can see we have a dominant weekly cycle, which is broken up into these minor half cycles that we have here. Amazon formed a higher low relative to the prior low, so there was a chance for this rising phase to be more powerful and to get up to this intermediate 78.6 at 36.42 and the prior cycle high here at 37.76. That so far has not happened. You can see we had a very muted rising phase with just a 2-week rally that has already retested that key weekly low at 315.76. That is really a warning sign. So given the fact that we have already retested that low and we have a minor cycle due right around the middle part of November, we will look for this rally here to get possibly a little bit higher into this 3400 area and then movement back down into that minor cycle low. So that's what we're really watching for here in the interim in Amazon. After that, we will look for one more rally and then movement back down into that dominant cycle low timing, which is due out in around February or so of next year. So this is a more concerning pattern here for us in Amazon. If we were to really break out through this red zone and then get through the 78.6 around 36.50 or so, that would be much more positive and really invalidate this overall bearish thesis here in Amazon. So I just wanted to let you know of that.
All right, fantastic video. Great work, RV. This is an example of the type of analysis we do, cycle analysis, and he just is such an expert at it. Great illustrations there. And it was important to see the market leaders, and if you watch the whole video with the 16 stocks, you're going to see basically a pretty mixed picture. There's a lot of stocks that are set up for making bottoms and moving up after this market pullback we've had, and a lot of them that look like they're still in trouble. So that probably means for the stock market a complex top being formed in here, and a lot of mixed action and maybe a lot of swings coming forward. I think it's important that you watch this video and see all of that analysis on these 16 stocks. So just great work by RV. All right, we're going to look at something a little bit different here as we look at cycle analysis and correlations. In the cycle analysis workshop that we have, and I'll tell you a little bit more about that in a moment, there's a video in there that we talk about how correlations do affect cycle analysis, and how, of course, the relationship between particular stocks in a group, how they relate to each other, or how a particular stock, or in this case an FX pair, may relate to some futures. So what's important to set this up is that when the energy market is strong, it helps countries that are natural resource type countries, and Canada is one of those. So generally, if you're in a condition where energy is strong, then the U.S. Canadian chart will be going down because the U.S. will be weaker than the Canadian. And I'm going to illustrate that to you so you can really get a sense for the correlations. And then I'm going to show you the cycle analysis on the U.S. dollar, Canadian dollar, and how that resolved itself. And this is just, to me, a great teaching piece around cycle analysis and the importance of understanding correlations. So we're going to start out right here. And this chart that you're looking at is a chart that shows you the correlation between the U.S. dollar Canadian. You can see that right there as we're looking at a weekly chart. And this line over here, which is light crude. So if I go back over here to December of 2020, this upward arrow points to this big gain over here in the U.S. dollar versus the Canadian. So the Canadian was getting weak as a result of oil plunging. So oil here was about $1.40, and it moves all the way down over here. Oh, that's not the right scale. So anyway, you get the idea. The oil market had a huge decline right in there. I have the wrong scale up there. So what happened after that, and you can see this uptrend right over here, this illustrates the upward move in the energy market in oil. This came over this last 18 months during the pandemic as oil had this great big rally. And of course, that was related to the stimulation that was going on by all of the central banks. And then continued tightness in the energy market. And you can see what happened. The U.S. dollar versus the Canadian continued to fall during that entire period. In other words, the Canadian gaining strength as the oil market moved up. There was a downside blip here in energy that gave an upside blip here in the dollar, as you can see, versus the Canadian. And then when energy began moving up again, yes, the dollar began to weaken because the Canadian strengthened. And this shows you the amazing correlations that you see. In this case, it's an inverse correlation. But if we were just looking at the Canadian dollar, it would be almost perfectly correlated with this. So sometimes it's a little confusing when you're looking at cash pairs versus futures. And in this case, strength in oil means weakness in the U.S. dollar versus the Canadian. And I hope that is very clear. So now let's go over and look at charts in here of the U.S. dollar versus the Canadian. And here is your chart here of the cycle analysis, and I'm going to give you a little bit of a lesson in here. So if I go to if I remove this, and you can see this, let's just take all those drawings out, and you see the U.S. dollar Canadian cash pair. You don't really, if you don't have a trained eye, you don't really see the rhythms of the market and the important information that's in there. But once we do the analysis and we put up the weekly chart with the cycle brackets on the bottom and the cycles drawn in and the important support, resistance, momentum conditions, all of those, then you get a real good sense. So again, we're looking at the US dollar Canadian, and we know that during that big period of decline in here is when the energy market was rallying, because I just showed that to you. Let's just take a tighter look in here so that you can see where we are right now. So we use cycle brackets right here to help us understand the rhythmic timing. And you can see that this cycle bracket is a dominant one, and these are minor ones. So there's like a half cycle that you could see the low right in here, and then the low right in here. And that makes up the dominant cycle. When you get into a rally phase, and it's supposed to go much higher, but you get what we call a left-hand translation. It means it peaks way on the left side of this cycle, and when it does that and breaks the key low, it is likely to fall through the end of the cycle period, which it did exactly. This is another left-hand translation, and it fell down here exactly. So this is the US dollar versus the Canadian, extremely weak, while the energy market was extremely strong. Now, something is a little different right in here. And this cycle that you can see right here has held up for a fairly long period of time. You have the minor cycle here, and then the minor cycle rally, and now breaking below that level, but it's right at support right now. This has about maybe 4 to 6 weeks left in it, And what that is suggestive of is that if it can hold without breaking this low, then the US dollar versus Canadian will have built a base. And during a time frame when energy is likely to be pulling back, that would be out here from mid-November all the way out into sometime into January, February, that would be a period where the US dollar versus the Canadian would begin to rally. Right now, energy strong, the US dollar is turning over. This is the momentum indicator, and you see that this reversal scout, as we call it, is now turning down, and in this 4 to 6 week period where we would expect that the dollar Canadian would be a short if it tried to pick its head up because it's in this area. These yellow ovals tell you when the greatest downside risk is. If you learn about cycle analysis, you will learn that when there are multiple cycles in corrective periods is when you get your biggest declines here and here and here, and we're in it right now. If it can manage to not break this low, and that's a long way away because you see it's still in an important support area, that's the green area. Notice the red areas are where the resistances are and how that brought selling. So this is the support area, and this is suggestive of the fact that over this next maybe month, plus or minus, it should be under some continued pressure. The US dollar versus Canadian during this period where the energy market is very strong, light crude pushing up to $80, probably going higher. The natural gas market pulled back, and that's probably going to be bouncing up again. The gasoline market, which was very sluggish, now has exploded to the upside. So all of that is good for the Canadian because the Canadian is based on a natural resource economy. It's bad for the US dollar versus the Canadian. It's likely to be falling in here until it gets into this period. Now I'm going to move over to the daily chart so that you can see that the cycle analysis holds up in here also. So let's just look at this last couple cycles where it was moving down. And here is that period where, of course, the US dollar versus the Canadian was moving down based on strong energy. And you can see in here also the minor cycles and how they line up. Here's a beautiful one here. Here's where they nested and you got the bigger decline. You got this gravestone evening star, which is a very rare pattern and really declares a peak. And then you had another area here where it sold off in resistance and now breaking cycle support. What that tells you is that what we showed you here in the weekly where it's in declining phase, it's in a strong declining phase right now. And when I look at this, that says out to about the 1st of December. So we said late November is where it's likely to start moving up. It could be late November, beginning of December. But right now, every rally in here is looking like it's going to have a problem. Also, our momentum indicator in here is the slim ribbon. It just turned red right over here, which tells you negative momentum. Look at these signals right over here on the slim ribbon PO. Slim ribbon positive. This is one of the best momentum indicators you'll ever see. It gave you this positive cycle right there and right over here as it was positive, neutral while correcting, and now goes negative. So the US dollar versus the Canadian is giving us a lot of signs of going negative. So what are the teaching pieces in here? Well, I showed you the cycle. I showed you the correlations first between the US dollar Canadian and the energy market. It's very clear. They really track each other very closely, in this case inversely. We saw the cycle analysis, which is very clear on the weekly and on the daily. And right now, the dollar Canadian is in a declining time frame, which is likely to go out near December 1st. And that means that rallies really need to be sold. And that's how you find high quality entries. When you know the highest probability of directional decisions, then you can find the resistance levels, in this case, where it is likely to fail from on rallies. And you can see how beautiful that absolutely works. I hope you found that to be just absolutely a great teaching piece. And I was excited because I thought it was just fantastic. If you love cycle analysis, I'm going to tell you how you can really learn a lot about it. And then following this little piece I'm going to give you, we're going to tell you all about what we think is coming up in the stock market. So This is an announcement that I don't bring very often, and that is a special on our cycle analysis workshop. You're going to learn my method of analysis, developed over 47 years. It took me over 2 years to write this and over 6 months to produce it. There are 20 video modules, plus you're going to get many of our tools for text videos. You're going to have enough to watch in here of like 20 hours plus, and even more than that. And learn about this style of analysis. If you learn this, you're never going to look at charts the same way as you did before. And included in this, and we have not done this before, for everybody who is a member of our cycle analysis workshop, or who signs up, now through this next several weeks, you're going to be included in a November 23rd live event where we're going to illustrate more of this for you. We're going to answer all the questions for all of the people that are taking the cycle analysis workshop. We have had many people that have done this already, and it's changed the way they look at charts and changed their trading. Go to askSlim.com and go to the workshop information page. And on the front page on the top, there's a link to this special. And that's 46% off. I mean, it is an unbelievable deal right now for you to get the type of learning that we provide here. Matt has a demo reel which give you little clips of some of the things that are out of those most of those videos. And you can write to him, Matt at askSlim.com, for information, or if you want to get the link from him for the special. So you're going to learn cycle analysis, and it is really going to change things for you about how you understand the markets, the energies. Cycle analysis is basically a visual way to see money flows. And if you understand money flows on multiple time frames, you really have a much better way to understand what's going on in the markets. And we teach you everything about how we look at momentum conditions and support and resistance levels, and how all of that comes into play, and actually how chart patterns are formed based on cycle analysis. This is an amazing workshop. Please take advantage of just this 2 weeks out over here for this huge 46% discount. Write Matt at askSlim.com if you need any more information. All right, here's our look at the stock market for this week. We've seen the stock market put on a little bit of a rebound, especially off of the last Monday's big sell-off that we had early on some Evergrande fears. And this has been a week that the market benefited from people coming in and looking at some bargains. I talked earlier in the show about some of those bargains being Chinese stocks, which are down over 50%. So some of those ADRs are getting bought. You should look at those. And the overall, after the market had fallen, 6% for the S&P or 7.5% for the NASDAQ, it made sense that some buyers would come in. A lot of the mega caps, as far as in the tech stocks, they don't look great. If you look at RV's video that he put up this week on the mega caps, you're going to see a ton of information on there, and they're pretty mixed, but a lot of the techs look like they have some problems. So that kind of is weighing on the market, and we see the NASDAQ weaker than the rest of the market actually today. So we're going to look at the S&P 500, looking at the SPY, and get a peek for like the next 1 to 3 or 1 to 4 weeks. So that's the Canadian that I was looking at earlier in the show. If you didn't see that piece, you got to go see that. So here is cycle analysis on the SPY. And you can see that, we had been moving up, of course. And here are your cycle brackets right in here. And this low came right over here at this point, and this is your 6% drop. It says 5.7% right there. This got it down to about 6% right over here. What's interesting about that is that this is a cycle low and this is a cycle breakdown. What that says is that rallies are likely to fail. Now, this one got all the way back up. I'll get a little tighter look in here. to that minor 78.6%. That's pretty unusual when you get that big of a bounce. Still, the momentum is negative, and you could see this gravestone right over there, that gravestone doji, that occurs actually in the intermediate sell zone. That's right in here. Let me make that a little clearer for you to see. And that is a warning that there are sellers in the market up in that area. And it doesn't surprise me that the market could bounce halfway back here. And we had, these pretty good size upward attempts, 1, 2, 3, and then this big upside gap right here. But it really, the highest probability for the stock market is that it's going to fall back in here into this area. Now, the expectation would be that it would test this area about 426 on the downside, or get even lower in there. But we're in a very choppy period right now where it makes sense when you're coming off of a extended bull market top that a lot of traders are still in that paradigm, investors, where you buy the dips and expect it to blast off to new highs. But notice this dip, it didn't blast to new highs. It hit resistance and then began to sell off again. It's likely that we're going to see a lot of that. And we make it into a very choppy period over here. But overall, I'm thinking that the highest probability, as momentum has turned over in the intermediate charts, is that rallies will continue to fail and that the biggest risks are to the downside. So for the next 1 to 3 weeks, we would expect the next week right over here. This is the minor cycles have kind of been around between 9 and 11 days. That's about what this one is right over here. And then gets this rally, and then you get another one where they kind of line up here between these two timing lines that you see. That's where the bottom should come up. That cycle low of 428.86 was taken out. That is a bearish occurrence. It should mean that rallies fail. And this rally is a little bit sharper than I would have guessed that would happen, but still, the jury's out. We don't really know if that will hold. And again, the probabilities are that it won't. We're looking for the slim ribbon PO to give us a down arrow right over here in the next day or two, and then essentially signal that the declining momentum is still in force. You can see in here where the slim ribbon was giving you all of the green indicators right there, where it was positive here, and the signal line, the slim ribbon PO, giving you these positive readings all in here and here. Well, you can see how that changed. And the market has changed even though traders and investors don't believe it yet. So again, the chances are pretty good that we're going to see downside in the market. So we're going to kind of look for downside in the market here over this next, we'll just look for maybe 4 to 8 days. And then what happens after that is you get into another upside phase in here where it's probably going to try to get to the upside again. With some stocks, as we illustrated, RV illustrated in the mega cap analysis, near bottoming areas, and some stocks really looking not good. This could be a very choppy area in here, and that's really what we're looking for. Bull markets, when they peak, they don't just all of a sudden ring a bell and go into a huge decline. That doesn't happen. You get these residual buyers that come in that keep believing that the bull market's going to continue. Of course, I don't believe that. And right now, we're looking at evidence that says, well, at least for the intermediate term, it doesn't look like it will be able to do so. So we'll be looking for about a week or so down, and then again getting into maybe another week and a half or 2 weeks of potential rally out over here. So for those stocks that you love, the ones that you'd want to buy, it seems like if we got this dip in here, which is the highest probability, then that would be the opportunity, because seeing the potential for two-sided trade in here over this next month's time, it seems like that would be the best way to be looking at this market, considering that overall bias is to the downside, but it's really likely that it's going to give two-sided trade for those that are active. In big rallies in the stock market, I believe that investors should be looking at those as opportunities to reduce long side risk. But for active traders in the market, people that are active, I think there's two-sided trade here coming up for about the next month, and that could be a very good opportunity. So maybe a week or so down, and then maybe a couple of weeks back to the upside, and really looking at this range in here of somewhere down under 425 on the SPY, potentially up here to as high as 448, though I doubt it. If it got through there, that would give me some reason to be reevaluating this. Maybe up over here about 443. So for let's just say 423, 443, that kind of looks like a range. And if that is what occurs, there's a lot of opportunity in there for those people that trade based on ranges, and you can see that may be some great opportunity coming up right now. So that's a look at the cycle analysis in the SPY and the absolute fantastic clarity that you see in there of the information that was bullish that has now turned more negative. I think that is very clear. I want to remind you that we have a cycle analysis workshop special going on. If you're watching only this clip on YouTube, please do go back to the main clip and you'll be able to get some more information on that. You really want to learn about that. Also remind you that this Tuesday I'll be speaking at the Wealth365 event on improving your short-term trading, day trading. I'll be speaking for about 50 minutes. And I think that's going to be very enlightening if you come there. I'm going to put some of the link for the free, to join me there free on these posts, and also write to team@askSlim.com, and he'll send you that free link to the Wealth365 event, which is 6 days long, and just a great event. And I'll be there on Tuesday. And please go to the front page, down around the middle of the front page, and click the PSP. If you're a first-time askSlim user, then you click that, and you're going to see our most popular services previewed to you for 7 days at absolutely no cost to you. We want you to get a taste for what we do, because then you'll sign up, and our growing membership will continue to grow. We can keep bringing more and more great content and analysis to you all of the time. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been